What's going on, guys? Welcome back to the channel. I wanted to post this video after looking at this article at Norfolk Southern, and as you see in the title here, it says higher costs will pay off in the long run. It says railway defends approach of not focusing on operating ratio, which is kind of wild, but let you guys see this article and just see. It looks like Allan Shaw, he was forced to listen and take the advice of what was given to him by the STB and FRA, or he actually listened and learned from it, from the advice that was given to him by the STB and FRA and the public, or maybe the combination of both of them. But let's look at this because so everybody's come out with a Q3 earnings. Everybody's operating ratio is better than Norfolk Southern's, but why is Norfolk Southern's higher? So typically lower is better operating ratio. Give you a little perspective. Last year it was 62%, now it's 74.6. Said we're invested into the long term and we're not going to chase the short-term OR targets. That's interesting that he says that, because now he's going against Wall Street, and we know how Wall Street reacts to stuff like this. So this was posted October 25th, 5 days ago. Now I don't know when the call was. I'm guessing the call was probably a day prior, or maybe the day of, or a couple days before. Let's look at the 5-day. Let's look at the 5-day stocks. It's dropped from 197 down to 185, which doesn't seem like a lot, but if you have a majority holding of shares in this company, that's a lot of money. So as you can see, Wall Street's not happy. But let's look down here a little bit further. I really wanted the Norfolk conductors and engineers and new hires to see this, because this has been one of my concerns. One of my concerns is, as we all know, the government pumped a crap ton of money into the economy last year, a year prior, and now, of course, inflation has gone through the roof. Housing market has not yet started to tip and go downward. Unemployment is still around, I think it's still around 3.8%. It was 3.5. It went from 3.5 to 3.8. And the feds are doing, they've been, doing QT, which is quantitative tightening, to try and get a lot of that money out of the economy. And right now it's sitting around $90 billion to $100 billion a month is what the feds are getting out right now. They should know soon if they're going to either raise interest rates again or lower them. If they lower them, it's really bad. From all the experts that I pay attention to, they probably will either stay where they're at, or they may go up a quarter point. But we'll see. But I've been worried about all of that, because interest rates, as you know, these big giant corporations take out loans and stuff, and then they have to pay the interest rate back to them. And if they can't afford it, then guess what happens then? Unemployment. People start getting laid off. People start getting furloughed. Business starts to go down. Your amount of traffic will start to go down, because companies can't stay open, or they can't produce the same amount they did because of whatever reasoning. And so that's what I've really been paying attention to. I haven't said anything about it. I've just been watching. But here's what Allan Shaw said that really surprised me. He said last December that while market downturn might result in higher operating costs, which is what's going on right now, it's sitting kind of steady, and everybody's kind of, all the carriers are starting to show a downward trend versus last year as far as freight. The option of furloughing employees can cost the railroad much more in the long term. Boy, did he learn something? He was the one that furloughed all the employees during COVID. And it took them, they're still hiring. From my understanding, they're still hiring, trying to get caught up. And so it seems like, even though the market may start to trend downward as the feds continue to use QT and get as much money out, furloughing employees can cost the railroad much more in the long term. So let's see. I'm really curious if is he going to live by this? Is he not going to furlough anybody? Are they going to continue to pay guarantee? I don't know if anyone's making guarantee right now. I'm sure there is, but it's probably not due to lack of freight. It's probably due to something else, maybe a derailment or reroutes or something like that. But I thought that was interesting to see that. And he says that is because when freight rail demands bounce back, the railroad can't meet the demand and therefore loses the service to trucking, he said. Service disruptions can also arise because there are not enough crews to run the trains. So it's almost like maybe Norfolk Southern and all the other carriers for that matter, BNSF, UP, CSX especially too, they've probably lost hundreds of billions. I wouldn't say hundreds of billions. I bet they lost hundreds of millions of dollars to their stupid decision of furloughing their workforce during COVID. So let's hope that they realize that paying guarantee and continue to paying these taxes and the benefits for their employees is a short time investment for long-term growth. So hopefully he practices what he preaches here. And if things get slow, it doesn't matter. Hang on to your workforce. It's going to bounce back. It always does. They're looking at 2025 is typically what everybody's saying when the Feds are going to start to drop interest rates. So basically, if no one keeps up with the economy and you're kind of completely new and you know what's going on, inflation, what the Feds are going to do, they're going to, they've raised interest rates on housing and everything else. It's crazy. It's like at 8% now. What they want is unemployment to spike. What happens when unemployment spikes? When unemployment spikes, they can't pay for their houses. They put their houses up for sale. That boosts the inventory for housing. That brings housing prices down. But nobody's buying houses right now because interest rates are so high. So now what you need is people to post their houses for sale. Nobody's going to buy. Nobody's going to buy because of interest rates. And then people will have to start dropping their housing prices in order to afford them. Nobody can afford a freaking house. I think for a $400,000 house, which is the average housing cost, which is nuts, unheard of down here. I mean, you can buy a $400,000 house in Alabama, but my house costs $180,000. The average household now costs $400,000 at 8%. That's like over $2,000 a month in mortgage. And you have to make like $150,000 a year to even afford that. That's bananas. So it looks like train velocity has increased. So it seems that maybe they have started to shorten trains a little bit, but it's only increased 7.3% to 20.5 miles per hour. That's not good, but at the same time, I know there's some areas where you can only go 25. But here's the Q3. Let's look at the Q3 results for NS compared to last year. So net income was $478 million, $2.10 per diluted share for the third quarter of 2023, compared to the net income of $958 million, or $4.10 per diluted share for third quarter of 2022. That's a very, very large difference. Almost half, literally half. Definitely in the share part. But so other than that, I'll see you guys on the next video. Thank you guys for being here. We're still growing, even though I'm not posting as much. But the fishing season has come to an end almost. I've got 2 more tournaments. One of them is our classic for our club, and then we have a benefit tournament for veterans on the 11th. And I will have my GoPro and stuff there. I was gonna bring it. I brought all my stuff to me with Ross Barnett, Mississippi, but I left my SD cards at home, and I couldn't. I just wasn't gonna go spend a couple $100 on SD cards, so I just kind of fished without it. But I'm gonna be taking you guys with me along next year. That is my goal, to bring you guys along with me every tournament, every step of the way, and really push the fishing content out and keep up with the rail stuff too. So we'll see what happens. I'll see you guys on the next one. See ya.